Good morning. This is Bill Biederman from the Allendale Trading Desk. It's Monday, March 7th. Commodity markets today should be higher across the board. Corn market is up 2 cents, soybeans up 2, wheat's up 1. Crude oil is up $2.11 this morning. The dollar is a little bit lower, providing support to all the commodities, and the stock market is about unchanged, currently down about 5. Over the weekend, Libya fighting turned against the rebels, not the protesters. They've been relabeled as rebels, and they've been pushing them back. This is causing some friction around the world, and wondering how this will all end. And if it does move into the more developed nations and main producers, it will be a problem. Right now, developed nations are contemplating releasing oil reserves around the world, and if they do that in a tandem effort, that will have an effect on the markets. However, if it's just one country that does it, it is not expected to have any real impact at all on the market. Crude oil is currently trading at 106.45. Now, the targets over the weekend, according to all the experts and analysts, is 106 to 110 as a spike high with the kind of news that we're trading right now, as long as the main producers and the shipping routes remain unthreatened. However, and if that's the case, they expect that the economies will continue to rebound on an inflation-based recovery that would be supportive to most commodities, especially food, which is being touted around the world as one of the most bullish markets there is right now. However, if the production and shipping routes are affected by the violence, then they expect crude to hit 120 to 140, maybe even exceed 140. This would cause economic turmoil. It would threaten the inflation-based recovery because of the increased cost of living. It would cause consumers to pull in their spending, and that would create a fear in the marketplace, and that would drop not only the stock market, but that would drop the inflation pumped-up commodity markets. USDA report will be coming out later this week on Thursday. Make sure that you tune in to Rich's report on that. Also, Allendale's acreage report, which is the biggest survey in the United States. We're getting a huge response to this. We encourage you to call and be part of that response. You can either call us. It takes just about 2 minutes at the very most to go through your numbers with you. We also encourage you can do it online if you want, but whichever way you're doing it, make sure you sign up for the webinar and register for that, which Rich will be going over on the 16th. That's almost 2 weeks before the USDA report on the 31st, and he'll go through all the numbers with you, and that will be before that the numbers get released to the public. So it's a great tool for you. This is a very accurate report that we've had great success with in the past. So March 16th is when we'll be doing our webinar, and go ahead and get in your acreage numbers this week. Very important. So today, overall, we do expect cautiously higher tone to most commodities based on an inflation-based recovery. And the key to watch for the success of that trading approach is going to be the stock market. If you start to see the stock market fall apart, that would indicate that traders are starting to perceive fear out there that the higher crude oil and the violence overseas could get into the markets and cause consumer spending to stop, in which case you'd want to bail out of commodities and even go short very quickly, as we would take some of the air out of these markets. But overall right now, as long as the stock market's steadyish, we're calling these commodities higher. You have a great trading day, and we'll talk to you later.